weight of the politics on what's happening is not being carefully analyzed and considered in the people's investments right now. It's an afterthought. And what's transpiring in this and the separation and the political paralysis, not just here, but in other places in the world, particularly in Europe. I'll close on this, and maybe it's something to talk that if you have me on again. I believe that we're seeing the beginning of the end of the European Union.
Fan favorite Peter Grandich returns to the show. He is the founder of Grandich Co. He was on the show a couple months ago talking about 5 reasons why you should be building a financial arc. Link down below if you want to revisit that interview, or up here. Now, we'll be revisiting some of the themes today because it's still more applicable than ever. We'll be talking about a lot of things today, including Peter's updated views on gold, uranium, copper, base metals, mining stocks, and the overall stock markets. We'll be getting Peter's take on Ray Dalio's recent article about how there could be coming social unrest, perhaps even civil war. And we'll be talking about some geopolitical issues as well. Peter thinks that the EU, for example, is headed towards being dissolved. Very interesting take there. Now, I'm launching a newsletter later this month, so if you'd like to subscribe to get weekly updates on my thoughts, my analysis, as well as a summary recap of the previous weeks, highlight videos and news, make sure to put your email down there, link in the description down below to subscribe to my newsletter. It'll be released later this month. You'll be one of the first to get the first edition if you subscribe now, completely free. Peter, welcome bak to the show. Good to see you.
Same here, David.
Morgan Stanley. Let's start with market news. Morgan Stanley's Wilson. Mike Wilson says a 10% stock market correction is highly likely. Now, you and Mike Wilson both are kind of on the same page in terms of where the stock markets are going. He's been bearish for quite a while, and so have you, I believe. Let's see if I can get your thoughts on this. Do you agree that a small pullback by the order of perhaps 10% is likely to come? He says, I think the chance of a 10% correction is highly likely sometime between now and the election. What's your take?
David, I mean, I am bearish, but I think that's kind of a vague way. That's fairly, how many months away, and there may be a 10% correction. I don't know if that's a market forecast. I'm from the
Okay.
old school, my friend. I don't know the gentleman, so I don't want to pick on him or anything.
Sure.
He might be phenomenal. My feeling about the market is this: if you're interested in the next few weeks or few months, I think that's anyone's guess. I think, flip a coin, do what you want. If you want to start talking about multi-years out and resort back to what a stock market ultimately is, which is where you buy part ownerships of businesses, and those businesses will mostly do well or not so well, depending on economies, then I would say I'd be quite bearish because I think things are going to get a lot worse economically, socially, and politically. So I'm not so concerned about the next 10% or 10 weeks. I'm more concerned about the 30 to 50% over the next 3 to 5 years.
I do want to get your thoughts on the socioeconomic landscape of America, but just focusing on the markets for now. Okay, so the markets are interesting. In your many decades of participating in the markets as an investor and speculator and analyst, have you ever witnessed anything like this? And by this, I mean specifically just a few stocks pulling up the entire index. The tech sector has been the only sector outperforming the S&P 500 this year out of the 10 sectors of the S&P. And within that tech sector, it's only really just been a few names pulling up that sector as well. It's just a very concentrated market. Have you seen anything like this?
David, you make a very good point. Probably one of the primary reasons to be at least concerned, if not outright bearish, the lack of following and improvement as those few stocks went up 8 to 9 out of 10 times proved troublesome down the road. But I'll tell you what I've seen that I've never seen before in my 40 years. Given where market prices are, where valuations are, and given what the mood of the market is, the complacency among investors and the so-called professional public, with all the fundamental economic and social factors that one could argue that are as much bearish as they can make an argument of bullish, the fact that there's such a complacency and not a real fear at all that I see at all, even at these high valuations, suggests that what normally succeeds over time, contrarianism, is the thing to be, and be contrary to the popular opinion now that this market's going to just keep going up and up.
Right. Is this reminiscent of 2000 for you?
Well, the only difference is between 87 and 2000 and 2008, there was the ability for the government to step in and bail out if we have a crisis. We no longer have that availability because we became so indebted and we're spending so much money each year more than we have. We will not have the ability to simply print 5 or 10 or 15 trillion, whatever it takes to whatever ends up happening, and have the market accept that as that's a net positive. That's the big change now. I don't think the cards can be played. And one of the big reasons is one of the five reasons of my Build the Ark is that political paralysis. David, here in the US, I can only address in the US, Democrats and Republicans cannot go in a room and make any worthwhile legislation anymore. And on top of that, they each have a faction in their party that wants to move more extreme away from their center. So I don't believe if and when the next crisis comes that there's the political will to fix it this time.
Okay, what do you mean by this debt issue is going to prevent the government from bailing companies out? I mean, the company, well, what we saw last year was the Federal Reserve and the Treasury bailing out a couple banks, right? Backstopping bank losses following the collapse of Silicon Valley and a few others. You don't think that's going to happen to the same extent
So
as maybe 2008?
So in the 40 plus years, I've seen three major financial crises. Each at the time was perceived as a major crisis, even though if you look at 1987, when the Dow was just a few thousand points, you would say, what big deal was that? But for that time, that was a significant financial crisis. Same thing in 2000 and 2008. But each time, the main thing that turned the turnaround for the market was the Fed acting in a much easier stance, creating all sorts of additional money and, of course, debt creation. The governments can no longer do that without fear because people have come to the conclusion that we're now getting to the point we may not even be able to make our interest payments. So that card that was readily available in those last crises, I don't believe is going to be readily available for the next one.
I want to come back to what you said about political turmoil. This is a Ray Dalio recently wrote a gigantic article for Time magazine. It's a 50-minute read. I'll put the link down below for anyone who wants to check it out. This was released June 25th, 2024. Now, he says, and I'll just read the first paragraph and we can comment on this. I believe we now have to face the fact that fighting for democracy as we know it with thoughtful disagreement and compromises governed by rule of law is unlikely to work. People like me who had a long shot hope for the emergence of a strong middle that fights against the extremists to bring the country together and make major reforms to improve the system must recognize that the differences are becoming too irreconcilable for this to happen. And then he goes on to basically say he wrote an article a few months prior to this outlining basically why there's a 30% chance of a civil war. Anyway, before we go further, I'd like to just comment on what I just read.
Sure. So as we've destroyed the middle class for decades of mismanagement, we've also have basically destroyed the middle ground in the United States. People are at one extreme or another, and those who may remain somewhere in the middle feel helpless and actually fearful to speak up against one extreme or the other. And quite frankly, no matter what happens in the election now, whether Biden stays, whether they replace him, whether somehow he or whoever replace him wins or Trump wins, about half the country is going to be pretty well mad the day after the election. I don't think the election is going to solve anything. And what I think Ray Dalio is getting at is that because of that and this division, and we don't have to go far, we just have to turn on the nightly news, Dave, and look what's happening in Europe and how that breakup is occurring. Many people feel both Canada and the United States is its next stop. So I think he makes a very good point. I don't like talking about civil unrest. I don't want to wish it so I can point to everybody to see I was right.
Yeah.
I do think it's more likely now than in any other previous time in the stock market.
What has been one of the reasons for this widening divide, political divide, over the last couple of decades?
I'm going to give you two answers. I'm going to give you the secular answer, and then I'm going to give you the Peter Grandich answer.
Sure.
The secular answer has been a division of income. It has been realistically where a small percentage of people have become increasingly wealthy while the bulk of the people have struggled due to enormous things that we can speak hours about. That's the secular answer. The Peter Grandich answer is, I believe the more we moved away from the moral compass that a lot of different religions respect, I'm not talking about any other one, and we lived within a means that worked for this country for a couple hundred years, a moral compass is basically gone and it's spun out of control. And to me, that's when we could talk about whatever subject you want. If we wanted to get down to the rawest reason, that's what I believe we would find. We've lost our ways as a society in the simplest, most commonality where people shared, where it didn't matter really what faith you were from, but you had a common respect and dignity and all that kind of stuff. And that's been dissipated, if not taken out of the equation in many areas of the world, not just here in the United States.
Dalio lists a multi-stage cycle that happens in this changing order of things, if you want to call it that. He says, watch populism and polarization as markers. The more that populism and polarization exist, the further along a nation is in what he calls stage five, and the closer it is to civil war and revolution. In stage five, moderates become the minority. In stage six, they cease to exist. In stage five, class warfare intensifies. That is because, as a rule, during times of increased hardship and conflict, there is an increased inclination to look at people in stereotypical ways as members of one or more classes. So lots to unpack there. Do you agree, the first and foremost, that popularism, and polarization usually will lead to more unrest? And is that happening now?
I very much look forward to reading this article because it sounds like, from what little you have read, a lot of it is similar thinking on mine. You know, it, there's a saying I like to say to people privately, and I'll share it with you publicly. I hope for the best, but I'm praying to prepare for the worst. And that's the reason of the building of the ark. And I think caution and extreme caution for a lot of people is very important. And that's why I just want to fall back, David, on this. I don't want to take you away from where you wanted to go, but it's that complacency. Now, think about what you just talked about. I think there's a lot of realistic support to what you just read. I really do. But if we would go out now and have a poll anywhere, at least in the United States, among the financial service industry and listen to those so-called professionals speaking, I doubt we would have heard any one of them or a very small minority express anything similar to what Ray Dalio just spoke about. Now, look where Ray Dalio is and look where some of those other people are. I think you have to at least respect what he's saying and try to justify how he may be wrong. I don't heard anything yet that you said there that I greatly disagree with.
What can we do about this? Okay, by do I mean from an investor's perspective, but also a citizen's perspective.
I think the first thing we have to do is we fall back on how I live in our financial planning group. What's left of what I do in business is planning here in the US. And that is, I've had a motto for over a decade, almost actually 15 years, that less is more. I lived it myself, David. I could conceivably have a bigger home. I could have a more expensive car. All those things is still to many people a way of life. I think we have to recognize that past generations, yours, family's, mine, did with a lot less, smaller dwellings, not as big cars, all that stuff, but they still got through. I think excess or living and trying to keep up, as we like to say, with the Joneses has led to a lot of our issues. That's the first thing I think we could control ourselves. The other thing is, and again, this goes back to what maybe separates me from a lot of people because I wear my Catholic Christian faith on my sleeve. I really believe we need to return to recognizing that there's somebody far superior than us and they're not running for president or they don't run a big money management firm. And those words and those teachings need to be brought back into line and understood. And without it, I think we're a mess and we're going to have much bigger problems down the road.
From an investor's perspective, then, what is in this financial arc?
Let me just remind you what makes up why the financial arc. The third is a debt and deficits. The second is a retirement and aging crisis. The third is an immigration invasion. The fourth is the BRICS, and that's a big story you're going to be talking about in the fall, Dave. There's going to be a lot of stuff coming out the BRICS that's going to shock Wall Street. And then the fifth is the political paralysis. Now, in my boat, I think the important thing is preservation of capital now outweighs capital appreciation. Means it's okay. You can still try to turn a dollar, two or three, but you need to focus more on protecting what you already have than trying to add to it. I think the other thing is that the ultimate crime in investing won't be wrong. It's staying wrong. And one of the things that I feel is because of this complacency, everybody just assumes that what worked for the last 40 years is going to work for another 40 years. And I'm afraid that's going to be proven pretty wrong. And so I think you have to be proactive now and not reactive. And unfortunately, complacency normally leads to having to react. And when we have to react, emotion gets involved. And Dave, I don't care who you speak to, whatever, if they're willing to admit about their past mistakes, and they've actually made them, I've made a lot of them. Biggest mistakes that I can recall people making were during highly stressful times. And I don't think people have recognized how difficult things may be. And therefore, suddenly it will hit them and they will make decisions out of emotion. When it comes to investing, emotion is one of the poorest factors to incorporate into investing decisions.
Talk about gold. Citigroup forecasts gold demand to rise. Analysts at U.S. bank Citigroup are forecasting that the demand for gold will rise in coming months, pushing up prices. They're projecting prices to reach between $2,700 and $3,000 per ounce by 2025, which is coming up. Peter, what's your take on gold?
Well, I'll stick to what I said when it was under 1300. I said we're going to get to 2536. 2536 isn't that far away now. It's a couple $100 from where we are today.
Yes.
I think the more important thing about price is why has gold performed as it has, and why still have most investment advisors not embraced one of the three tier one investments you can have in the world? People got plenty of stocks, they got plenty of bonds, but they have very, very little physical gold in their portfolios. Yet it's the only one of three tier one investments you can make in the world. I think the reason is, and we're going to see it, and I'll come back and be the first to say I was wrong, but I think we're going to see a lot more advancement of the BRIC nations and where they're going as these fall meetings come together. And I think we're going to get a real minimum hint of how gold may play a role in whatever they're planning from the monetary side of things.
Do you think that that reason that you just stated was partly responsible for the rise in gold's
Yeah,
price this past
yeah.
year?
Yeah, David, I believe it's the single biggest reason. I think there's more, but believe that's the single. And that's the reason why they can't take it back down, Dave. As you and I speak here today, we had another article again. Oh, the Chinese didn't buy and they took the market down 30 something dollars. They did that a month ago and just going higher than that in a couple of days. I believe the same will be the case here. The physical ownership desire for gold is surpassing the normal plays that are played in the paper market. And the key part of that is because gold's trading has moved away from the London, New York environment and to Asia and Shanghai. And that has really changed the perception and the reality of how gold trades. And and let me add this, because I used to get picked on because I never said the same positive things about silver, but right now silver has as good an argument in my book as gold does. So I think both of them will continue to perform well. And let's remember this, David, despite what all these other people like you to think, since the turn of this millennium, gold has outperformed stocks and bonds
Talking about since 2000.
since 2000. And if you really want to go, if you go back 50 years or so when gold started free trading, it's now outperformed bonds.
Okay.
And yet, if you talk to any so-called typical financial advisor and said, I was thinking about gold as an investment or an income thing, they would say, you're crazy. You should own bonds. But meanwhile, listen, it's always going to be the Rodney Dangerfield, get no respect kind of investment. But I would just tell you this, I would not want to see most people that I meet, from working class right up to the athletes I dealt with, not having at least some gold in the portfolio. And let me tell you why. I always tell them own some and hope it doesn't go up. And Dave, they all say the same thing. Mr. Grandich, why do you want me to buy something that's not going to go up? And my answer always is the same, Dave, because if it goes up a lot, chances are what you own a lot is going to go down. And I think gold minimally should be treated as an insurance policy. And yet most people have no real insurance on their portfolios not working out.
Well, do you think there was a paradigm shift in how people viewed gold this year? I mean, gold went up along with stocks, went up along with Bitcoin, it went up along with interest rates, which historically, the 10-year, which historically has been inversely related to gold, it went up with the dollar, right? So it just went up with everything. Is there something different now with the way gold is behaving?
It went up without getting that merited increase in chatter and talk and recommendations. It's still not Most portfolios that are put out by the major brokerage firms have little or no gold ownership in it. It's gone up because people who recognize on what's happening with the bricks, and again, I'll eat these words if we get through the fall and it's not shown to be this, but I think we're going to realize that part of what's driven gold has been a movement that's going to come out for these countries to trade among themselves and also others with some form of gold backing whatever they end up, how they trade, whether digitally or physically or a combination of both.
Peter, if you were still to speculate, which is to say, stepping away from the financial arc for just a bit, if you were to bet on something that has higher risk, but perhaps even higher return potential, what would that thing be? Sector, asset class, stock, whatever the case may be.
This is kind of silly for a guy who's down seven figures in these things to tell you it's the only thing that fits your answer. And that's mining shares, and particularly in the juniors, because it's very hard to find a sector as a whole right now that's greatly undervalued anywhere in the world, at least how I look at it. Even mining shares, the major producers have rallied since February. The only sector that isn't up are the companies that basically do the grudge work and make the initial discoveries and things of that nature. And the reason I only bring that up is if the world is going to need and grow because of AI, it's going to need tremendous more electricity, EV, all that stuff. It's going to need findings of new base metals, particularly. And we have not spent any real money for a decade and a half to find these new big major deposits. And the supply and demand scenario for these metals just get bullish and more bullish as each week goes by. Eventually, somebody has to go out and find new supply. And it will be these type of juniors that help lead that way. That's the only thing that really you can still argue about why they're bullish, because basically anybody that still own them can't stand them, including my wife.
What do you and your wife think about uranium then? The metal has surpassed $100 at one point this year. It's now trading around $85 a pound, it's stabilizing around that area. It's gone up tremendously over the last year, as you know, doubling in price since 2023. Walk us through the narrative behind uranium.
So my uranium friends are going to get upset because they know in January I bailed on them. I was a big player in the uranium when it was around 20 and was buying things like Cameco at 8. And when they got to 45 and 50 and got well over 100, that argument is still strong. Nuclear power must, and I would underline must be a significant part of governments to provide power in the coming years and decades. There's no question about that. The problem always falls back to why I originally just stuck with producers and not juniors. There's only a small amount of producers. The rest of the people are all wannabes. And that doesn't mean not some of the wannabes are going to actually eventually someday turn into producers. But they're going to be few and far between. And I just think that it's it's a good part of those gains have made. I think that market can still go up, but I don't think it's cheap anymore. And the things that to me, like I said, can only find cheap are the junior explorers that are looking for gold, silver, copper, zinc, things of that nature.
You think gold is still cheap at nearly $2,400 an ounce? I want to
No,
make
I
sure I
said
understand.
the juniors,
Oh,
the
okay.
companies looking for them.
I understand.
And
Well,
more, David, I'm sorry to interrupt you,
yeah,
but
no.
more base metals, because that's where the real need is going to be. That's why I sleep the easiest with copper, even though I don't think copper is going to go to 8 anytime soon. But I also think it's just going to work its way higher because it has just a phenomenal supply versus demand scenario.
Well, copper has had a tremendous run this past year, going up to $5 a pound, but now and then it's crashed all the way back to like 4.3. Bit of an uptick now since the beginning of July or late June, rather. Do you think copper has basically just been pushed up too high, and now people are responding to that by selling, and selling pressure is higher than the buying pressure? Is that what's happening right now?
Well, that was a big short squeeze,
Yeah.
and that hindsight investing. But since that time, let's not forget it was just a few months back when we couldn't get above 4, and a lot of the bears were talking about 250 and 3. The bottom line is, as we get into, especially past this year into 2025 and 2026, the supply demand scenario turns such incredibly bullish. And think about this. Chile, that just about every year or two used to open up a brand new copper mine, hasn't opened a real large copper mine in a dozen years. The bottom line is this: the supply demand scenario for all metals that I look at is most favorable for copper. So for me, copper is going to remain an important investment vehicle, particularly through the companies that produce it and explore for it.
Well, speaking of companies, Peter, how do you pick companies? And we don't necessarily have to give names, but I want to get your process. What do you look for?
Dave, my portfolio's down seven figures. You sure you want me to tell people how to pick juniors?
You know, a wise man learns from others' mistakes, but you're full of wisdom on the successes you've had as well. So,
Yeah. So, one of the ways I can answer that honorably, which is the only way I like to answer, especially for you, because you're a hardworking young
thank
man.
you.
I will just tell you that I learned again that management is the absolute key when it comes to junior resource companies. And proven past results of being able to do what most others can't, because the resource industry is failure is the norm. Every 10 companies that are out there, all honorable, all rolling up their sleeve, all trying their hardest, 3 or 5 years from now will come back one or two found, developed, sold, or brought into a new mine. Failure is the norm. And because of that, what usually separates it was management skills. And so I think it has to be the first decision if you're going to buy a junior going forward. You have to believe that this management can separate itself from most others. Then I think the second most important thing now, which used to be fourth to fifth 20 years ago, is where they're looking, because the political, economic, and social unrest that's now occurring in many parts of the world wasn't happening 20 or 30 years ago. You didn't worry too much about where you were exploring and mining, but now you have to.
Some miners told me that North America is the safest jurisdiction in the world to mine. Is that still the case, Peter?
For me, it is. That's the only place that I'm looking, but that doesn't mean that you can just go anywhere. I wouldn't want to do anything in California. I still think, there's some issues in other states that could be an issue, but by and large, when you look at a province like Quebec and Ontario, where they're just so proactive mining, when you look at Arizona and Nevada again, yeah, I feel more comfortable in North America right now than any other part of the world.
Okay. Listen, I'm not a geologist. I think I speak for a lot of people when I say that I don't know how to evaluate, in your words, how good management is, right? Let's suppose I go to a trade show and I stand at one of these booths. There's like 100 booths. Everyone's claiming to be the best management team in the world. Everyone's claiming to be on top of the best deposit in the world. What are some of the questions I should be asking to determine whether or not I should even look further?
So in all legal documents, the financial service firm, there'll always be that something says in there, past performance doesn't guarantee future success. When it comes to juniors, change it a little and say past performance is almost a certainty of future success. People that time in and time out have been able to find, develop, self profitably, or bring a mine into production and have done it more than once are more likely on average than to do it that somebody has been at it 30 or 40 years, nice person, speaks to you, works hard, but's never managed to turn it and do something like that. It is a real difference maker in the junior resource market. And where it also is, and it's so critical now, and again, I overlooked it in a certain situation, is in capital markets. The people that know how to raise money at the right time recognize how to do it efficiently and spend it wisely.
Uh, you're talking about you're talking about asset allocation in the mining company
Just
itself.
talking about, yeah, the junior companies now, how successful they are, the critical uh, I'm not the originator of this, and forgive me for not remembering who originally said it, but somebody used to say at the mining shows, a junior resource company is a burning match. And it
Okay.
always goes out. So if you don't have a book of matches, if you only have one match, you're done. And so again, management and how they not only explore, but how they're able to handle their money and raise money are the absolute critical natures. Can I give you an example? I never
Yeah,
plug
please.
this.
Yeah, go ahead.
It's my largest portfolio. I'm down the most I've ever been down on any stock in my life. Okay. But recently there was a change in management. And the people that were there who never really ran public companies to the point of success of finding something, selling it for a profit, or I mean, building a mine, have been replaced by two gentlemen who combined with them have done it 5 times correctly. So in that state, if you believed in the projects before, And now you have the addition of proven management that might have not existed there before. Now that's something even more attractive, even if you were erroneous, as I obviously was early on. The name of the company is Arizona Metals, just to be the point. But there is where management is going to make an absolute difference, certainly for my money.
Okay. And just to disclose, you're currently invested in Arizona. Is that something you're looking at?
I'll tell you what, so you know, so but it's, I've said it publicly. I don't hold anything back. I own a
Sure.
million shares, $3.57. I think the stock today is $1.48. So you can figure out how much I'm losing and how much my wife is not speaking to me about.
What? Well, okay. Look, a lot of famous investors have held on to the losses. Warren Buffett, one famous example, right? Why aren't you selling?
Because the project has always been great. That's never been in doubt in my mind. I was an advocate and outspoken about the past management. They left, which didn't hurt my feelings at all, and they were replaced by absolute major league starters. So I went from a single A baseball minor league management team to two guys that can start in the major leagues. That to me in itself, and reminding this, David, this is the worst junior resource market in my career, bar none. There's never been this discrepancy between the actual metal prices and the valuations that people are putting on these stocks, anything close to it is now. But at least now, what I have going for me is I have the key factor to match my liking for the project, proven management, very successful proven management, in fact.
I want to finish off on the financial arc that we started talking about earlier. Is there any stock sector from the S&P or Nasdaq, whatever index you follow, that could qualify to be in this arc?
Well,
Besides the junior miners that we just talked about.
yeah. So this is what I tell people. I don't want to own any general US equities not related to natural resources. But what I tell people are if you do, then you have to look at the ones that have greatly underperformed. And that would be in the small cap sector and even the mid cap sector. If you are like me and you find that there's certain types of companies that are not traded in the US but do similar business elsewhere, then you can look overseas, emerging markets in that general. Me, the safest is an equity index annuity. And I'm not here to give, this is not investment advice, but something where I can be assured of upside, but not losing principal is something I think a lot of people, especially those in latter years that don't have the opportunity to make up if there are losses, should look to protect. And that falls into what I said before about preserving what you have versus trying to gamble on bigger capital appreciation. Can I
Uh,
add one thing? Can I add one thing?
yeah, please.
There are two sectors, if I was your age and as handsome as you are, I would tell you that things related to power, the enormous amount of, we just had congressional hearings today. It won't make a lot of news, but it was an amazing watching Democrats and Republicans say the same thing at a committee. Normally they're against each other. And they were all speaking about how much more power just here in the United States we're going to need in the next 5 to 10 years to meet the needs of what's happening in the AI sector. And they all talked about how we don't presently have it. We're going to have all these brownouts and blackouts. It's clear to me that that's not just going to be in the United States. So I think anybody that's involved in the business of providing power, the parts, the machinery, all of that related to that is probably a growth section. The other area, unfortunately, is we're going to have to find ways to produce more food and more efficiently because a lot of the world is losing the ability to eat well and serve its population and so forth. So anything, in my view, that would help increase the ability for food to grow or what have you, I think is a sector. And of course, anything medical, because people are willing to pay just about anything to keep alive. So I still think there's places out there, but at this point in time, I don't think there's a lot of reasons to take a lot of risk in most of these sectors.
How do you feel about bonds then, right now?
I still don't believe we should own corporate bonds, even though I believe interest rates peaked for this cycle. I actually think the next move on interest rates is going to be lower. I think we're going to see 2 to 3 Fed cuts between possibly as early September, but no later than right after the election and clearly into 2025 because we're going to see a tremendous drop off in the economy. the peeling off of the fakeness. We've seen it now come out in the employment numbers. I mean, think about it. They came out with the employment number last Friday before, and they had to change it by 100,000, David. They lowered. How could you be possibly? How could if the Federal Reserve was truly using these numbers at face value, how could they be making planning monetary policy when the people who provide you the employment numbers have such great discrepancies month after month after month? And I think that bloom is off. I don't think. I think we're going to see the real numbers come out in the coming months, and they're not going to be good.
Just another stat to kind of illustrate your point. The number of people holding multiple jobs is now a record high. I can't remember the number exactly. It's a significant number, right? And there's different arguments to this. One could argue that this is not great. If you need to hold multiple jobs, it's not it's because you need to, right? The other argument I've heard is that, well, people who hold multiple jobs, they're running gigs, they're doing things, they're freelancing on the side. Those people generally are doing so because they have a higher income to begin with. Uh, that's an interesting take from some stats that an economist told me.
Well, that
Anyway, well, what's your take?
I would just say to you that that's why there's such a discrepancy from the monthly employment numbers and the household survey, because in the monthly BLS, which really should just be called BS, if you work in three different jobs, they'll count you as three different employed people, even though it's one person, as you said, working three jobs. In the household survey, that would be just counted as one person working three jobs.
Yeah.
Uh, the, the the turn down in the economy will also because of the political ramifications. What I think a certain party who's hoping that someone replaces the person that's in charge now thinks once that person gets in, things are going to just revert back to how they used to be, may have some momentarily excitement, but within a few months, they're going to realize that as much as the people battled him before, they're going to battle him even more going forward. So as we get into 2025, I don't see any political harmony being increased. In fact, I see more disharmony, if possible, in 2025 than we even had here in 2024.
I was actually talking to the chief economist of the Labor Department, former chief economist, and she said that when it comes to evaluating the health of the labor market, oftentimes they resorted to using IRS data that was more accurate than BLS data. So we don't have access to tax records, unfortunately, on a nation scale, but that would be something interesting to look at. Okay. Finally, Peter, any thoughts on the election before we close off? I was looking at the betting numbers on the betting markets. It's currently priced in today as we speak, 61% chance of a Trump victory, Biden trailing at 17%. However, there's only about a 40% chance of Biden stepping out of the race. In other words, Democrats still favor currently Biden as their front runner. And there's been talks of people pushing him out, but he's adamant of staying in the race. What's your overall assessment of the situation following the debate?
So late last year, certainly in my New Year's forecast, my comment was Biden will not be on the election ballot come election day. I still believe that. And obviously now some people have more reason to believe that's the possibility. The problem I had with that was at the time, which may not be the answer now, is I said the person that would replace them, if that name was said, it'd be the two worst words we could ever hear. And that was President Harris. I do believe that we're going to likely see, despite as you and I talk today, within a few days to no more than a week or so, we will learn that Biden will, for whatever how they plan how to exit, will suddenly stop running. And then they'll have an open convention. Uh, Whatever transpires, even if it is Biden, and even if somehow Biden won, which I don't think is very likely, as I told you before, the disharmony, and as that Ray Dalio reported, the separation of, and with no real middle ground or lack of true independence, especially if they're willing to speak up, uh, is a real negative. And what isn't talked about, and I think it's going to play a role, especially if there is a change from the Democratic Party, how will that third party candidate, Kennedy, play a role in that? People are not talking about that, but I can tell you this. Uh, he could be a spoiler for either side. And so this political disharmony is not going to go away. And it's an amazing thing that the politics and geopolitics, how few people in the financial service industry pay any real attention to it.
Wait a minute. You said Biden, if he does step out, are you saying he's going to step out on his own, or he's going to be forced out by the Democrats?
Well, he's never going to say he was forced out. I mean, that's what
Right.
he's battling today about. Uh, I think probably what's not being spoken about too is the concern is his son, who's already been found guilty of one made of significant crime, has a case in September. And if I was him, I would want to make sure that my deal, whoever I arrange is going to kind of take the place, is going to make sure that they step up or before January 20th comes that my son will be pardoned. I mean, don't people say that'll never happen. It'll happen. But I mean, it's the political. I'll close this way for your show. The weight of the politics on what's happening is not being carefully analyzed and considered into people's investments right now. It's an afterthought. And what's transpiring in this and the separation and the political paralysis, not just here, but in other places in the world, particularly in Europe. I'll close on this, and maybe it's something to talk that if you have me on again. I believe that we're seeing the beginning of the end of the European Union. And that is also going to open up a whole can of worms on the geopolitical fronts. But that's probably too much we've already talked about today, Dave.
Okay. Okay. Well, wait a minute. You can't hit on that and not expect me to follow up. We can talk more about this issue in depth next time. But I just want to know what you mean by that. What do you mean
Yeah.
yeah.
So think about some of the key countries that are there now. The France thing is just really blown everybody's mind. The United Kingdom, no one imagined what is transpiring there with the Labor Department, Labor taking over. Ireland is kicking up and really kicking up over the immigration and all. And I think the countries are going to become more focused nationalism again and point that the European Union has hurt them, not helped them. And the powers that be that used to basically control them out of Germany don't exist anymore. So that's a story for another day. And they also have to be concerned about what's going to happen with the BRICS. And let me just go back to that to close. I believe the BRICS and the formation of the BRICS, and I've said this to you for a year now, in the next 3 to 5 years, probably shorter than later, what they will do to world trade will have the same impact that the Industrial Revolution had. So the most important thing we should be talking about outside of our own place is the BRICS. And we're going to hear more about that in the fall. That's going to become a talked about topic. And, just as today, as you and I go off, India's prime minister and Russia's leader are together, happy. I mean, it's these are things that are just not being considered people on the geopolitical front that need to be. But I've already spoken too much, Dave.
No, I don't think you've ever spoken too much on the show, but I do appreciate your candor. Yeah, just to give some color to the audience, you're referencing India's visit, India Prime Minister's visit, Modi's visit to Moscow. It's happening as we speak today. And then earlier you're referencing the French election when the Left Alliance surprisingly won the election. Okay. But yeah, more to discuss next time for sure. Thank you very much today. Peter, where can we follow you? Follow your work?
I've learned to say X now, not Twitter, but I mostly communicate on X. I do have a blog, petergrandich.com, and I do have a YouTube channel. And David, I'll just say this again. The continuing watching of your intelligence and what you've learned in the few years from the days of COVID and working out of your apartment there in Montreal is just amazing. I really, really enjoy having an exchange with you. Whether you never come back again, trust me, this was one of the more enjoyable times I've had in a long time having this discussion.
Well, I appreciate it. That's very kind of you. I learn from speaking to people like you every day. So you're the source. People like you are the source of my growth. So thank you very much for coming on the show. We'll definitely have you back soon. More to discuss. We'll talk more about the EU and your thoughts on the BRICS next time. So stay tuned for that. Thank you very much. We'll speak soon.
Thank you. God bless.
And thank you for watching. Don't forget to like and subscribe.